Namaskar. This is Akhilesh Bhargav. Welcome to Tit-Bits on Business and Finance with me. The maverick Elon Musk, the promoter of Tesla, currently rated by Bloomberg to be the richest man in the world with a combined wealth of $260 billion. He has been a firebrand Twitter user with over 80 million followers and a legacy of taunts, memes, and unabashed comments which get him a lot of popularity, but sometimes he also gets into trouble. His reckless tweet about taking Tesla private earned him a warning and a penalty of millions of dollars from the SEC USA a couple of years ago. Musk is a self-described free speech absolutist who has been fiercely critical of Twitter and its policies. In March, he polled his followers on Twitter whether they thought that Twitter adheres to free speech principles or not, and 70% of the respondents, who happened to be 2 million in number, said that no, it does not. When Trump was banned by Twitter last year over its concerns of his inciting the attack on Capitol Hill, Elon Musk objected to it and tweeted that a lot of people were going to be super unhappy with the West Coast, which is the Silicon Valley-based high-tech companies now becoming the de facto arbiter of free speech in America. He clearly dislikes the Twitter curbs, and that shows in the tweets and the comments he passes. His interest in tweets and Twitter has, however, remained strong, and over the past few weeks, he steadily acquired a 9.1% stake in the company at a price of $3.5 billion to become its largest shareholder. He reportedly delayed the disclosure of his acquisition of Twitter shares, prompting its former shareholders to sue him, claiming that such delayed disclosure denied them the gains in the run-up in the Twitter share prices because of his acquisition. Upon his becoming the largest shareholder of Twitter, the company offered him a seat on the board, which he rejected, since that would mandatorily limit his shareholding in Twitter to a maximum of 14.9% and thus prevent him from a possible takeover if he wanted to do so. It clearly signaled his larger and long-term interest in the company. After such purchase of shares and the rejection of his board offer by him, he spent much of the week thereafter tweeting suggestions, criticisms, and apparent jokes about the company, betraying and disclosing rather his interest in taking over Twitter. A couple of days ago, Musk announced his larger plans for the company. He made an unsolicited bid to acquire Twitter at $54.2 per share, which is a premium of 38% over its last closing price on the markets. He said that the social media giant needs to be taken private so as to grow and become a platform for free speech. Musk said that Twitter has an extraordinary potential which he would unlock upon its takeover by him, and that he has no faith in the current management of Twitter. He further mentioned in his letter offering this kind of a takeover and said that Twitter needs to be transformed as a private company and that it will neither thrive nor serve its societal imperatives of being a platform of free speech in its current form. To him, it is imperative to make it a private company and ensure that free speech thrives. He said that he was not playing the back and forth game and that he had moved straight to the end, implying that it was his final offer. He termed his offer of 38% premium to the market price to be a high price, which he said that the Twitter shareholders would love. He expects that they would bite the bullet and offer their shares to him at that price. Musk therefore said that it is his best and final offer and that he will reconsider his options if this offer is rejected by the board of directors of Twitter. He mentioned that the American investment banker Morgan Stanley was acting as his financial advisor to the offer without mentioning how would he finance the takeover in case his offer is accepted by the company and its shareholders. It is very apparent that the funding of such a takeover would be through a combination of his own money as well as some debt, and that would require him to sell some of his shareholding in Tesla, which is the company that he has promoted and because of which today he's the richest man in the world. The stock markets cheered his takeover bid, and the prices of Twitter shares went up by 5% the next day, indicating, according to experts, a 29% likelihood that his bid would be accepted. The share price of Tesla, on the other hand, fell by 2%, showing shareholder concerns that a Twitter takeover by Elon Musk would be a distraction for him, which would not be in the best interest of Tesla. A market expert pointed out that of late, Twitter has been behaving like a legacy company with hardly any innovation, and that nothing has really worked in terms of its new products, while its overall revenue has struggled to catch up. The question is, are things so bad in the case of Twitter and its performance? The fact is that Twitter has been languishing of late, which has led to the exit of its co-founder Jack Dorsey and the appointment of Parag Agrawal as its new CEO a few months ago. It has had a lower than expected addition to its user base, raising doubts over its growth prospects even as it pursues big projects like setting up audio chat rooms and newsletters. Twitter needs to expand its user base and its revenue, and somewhere it has got stuck, and as outsiders say, its recent moves have failed to deliver results. Twitter did record a revenue of $5.08 billion in 2021, up by 37% a year ago, and its daily users went up by 13% to 217 million in 2021. But that is below the market's expectations and the company's own projections and estimates of its own growth. What was Twitter's response to this bid that Elon Musk announced? The Twitter board said that it has received Musk's offer and that it will decide whether it is in the best interest of the shareholders of the company to accept it or to continue to operate as a publicly traded company and not as a private one, as Musk wishes it to be so. So, they need to decide whether they are accepting the offer or they are rejecting the offer. Twitter said that it is consulting Goldman Sachs and others about this offer. A market expert remarked that Musk's offer will not be accepted by the Twitter board because though the offer is at a premium to its current market price, it is yet lower than the high watermark price of the shares, which happens to be over $60 a share. Yet another expert pointed out that there are deep issues about private companies and private billionaires having so much say in public opinion, electoral outcomes, and popular narratives of the day, which Musk would get in case he's able to take over Twitter, make it a privately held entity, and control its affairs. The fact is that if a single individual has got such a control over public opinion, electoral outcomes, and popular narratives, it is certainly not going to be for public good. And a social media company like Twitter cannot be allowed to go private in this manner. There are, after all, larger societal issues at stake here. The takeover bid of Musk has been clearly unwelcome by its board, and it could soon become a hostile one. A game of a hostile corporate takeover is one of patience and big bucks in order to outgun the other. And on both these counts, Elon Musk is a far more powerful and dangerous adversary if he chooses to go for the kill. With a wealth of over $250 billion, he can outgun any challenger in the Twitter game. Twitter may have gone silent after Musk made the offer, but it has not been inactive and it refuses to be a sitting duck. It has already announced a poison pill plan in order to ensure that anyone who seeks to take control of Twitter through hostile open market purchases will be forced to pay a hefty control premium to all their shareholders in order to make the takeover attempt unviable. And that would apply to Musk also. This poison pill plan has already been announced. This poison pill plan of Twitter also entitles its shareholders to purchase additional shares of Twitter at a discount, thus giving the company enough time to decide its future course of action in this game that has just begun. While the employee shareholders of Twitter are reportedly not in favor of a takeover by Elon Musk, its directors have apparently also approached other large shareholders of the company seeking their support to oppose Musk's takeover bid. The Saudi prince Al-Walid bin Talal, who owns over 5.2% stake in Twitter and who is one of its largest shareholders, rejected the offer of Elon Musk, saying that it did not come close to the intrinsic value of the company given its growth prospects. He thus indicated that the offer price is certainly far below what he would expect. In addition to the poison pill and the shareholder support, the company can even approach a white knight investor to scuttle Elon Musk's bid. If Musk, however, chooses to go for the kill, his options are many, but would only delay and add to the cost of the takeover. He can either increase his offer price and make it even more attractive such that shareholders are compelled to give him the shares, or he can start a proxy war in order to vote out the current management and get in one favorable to him, or he may compromise on the board positions that he would get in case he is able to take over the company, such that the current management, the current directors are not thrown out and they are the ones who are opposing the bid at the moment. It is finally a high stakes game which can disrupt the entire social media sector, and the final outcome will depend on who blinks first in this episode. In case of prolonged hostilities between Musk and the Twitter board, it is ultimately that the company will suffer because of the uncertainty, the cost of defense, the regulatory compliances and the investment losses that come with it. An analyst calls the takeover bid to be a soap opera, which he says will end with Musk owning Twitter after his aggressive takeover bid. He thinks that it would be hard for any bidder or consortium to come forward, and that Twitter's board will most likely be forced to accept this offer of Musk, or it will be forced to start a process to ultimately sell the company. We think that if Musk is serious about the takeover and is not playing games to entertain himself, which a bored billionaire would do, then in such a case, a likely outcome could be a takeover of Twitter by Musk. But then that would happen without the company going private. Its public limited status, its listed status, we think will still remain even if Musk is able to take over the company. This is Akhilesh Bhargav signing off till we meet again. Namaskar.